Hello everyone, Happy New Year. Professor MoneyPigTrading, January 8, 2028. We're going to talk about the 2022 US stock and crypto market outlook. And before we start it, if you haven't liked this video, make sure to like it and it will help our channel tremendously. And also we are on social media, Twitter, YouTube, Instagram, or MoneyPigTrading, and also have a paid Discord community, www.moneypigtrading.com. Feel free to follow and make sure to subscribe our YouTube channel and click on the little ring button. So every time we have a new video, you'll get a notification to get the latest contents. So what's happening in the US stock market in the past week, right? It has been very volatile. See quite a bit of drop in tech, a little bit of drop in SPY, but the financial are actually pushing out pretty well. So ended up, it actually happened on Wednesday, January 5th, the Federal Reserve meeting minutes. In December, actually, a lot of Federal Reserve officials discussed about interest rate high 4 times this year instead of originally the market expectation of 3 times this year, which was starting in March 2022. Originally, the market was expecting 3 rate hikes back to starting from June, September, and December. So because of this kind of unexpected event, you see the tech actually sold off 3% that day, spiked down about 1.5%. And even financial who's going to benefit from rate hike, pull back down that day as well, but quickly push up the day after. However, Federal Reserve meeting minutes is just a meeting notes. It's not really an official interest rate decision. So it's still kind of TBD, to be honest. So in my opinion, the market is still kind of overreacting at the moment. And you see the market actually try to rally a few times on Thursday and Friday, January 6th and 7th. However, a lot of hawkish Federal Reserve officials keep coming on the news and talk about 4 rate hikes many times, which I feel is very unfair. They can trade whatever stock they want. I know now that has more regulation. Before was a big scandal, right? And now they just probably don't get along with Powell and just keep coming on the news and done whatever they want to say and kind of affect the market, make it very volatile. I was like, what the hell is this? So just kind of give you a thought about what I think, but and whether you think is fair or not, you can leave a message down below. To me, allowing them to trade a lot of stocks without too many restrictions from the Federal Reserve officials, I just feel like it's very unfair, especially now they can just step on the news and talk about whatever they think, right? But anyway, come back to the investment thesis and what's going on in 2022. In my humble opinion, the next important thing on January 11 is Powell Congress testimony. That will be a critical event. I'm sure a lot of congressmen and congresswomen will just ask Powell right away, do you think you will raise the interest rate by March? Will that be 4 times this year? And based on what he said, I think it's going to drastically change the market direction. If he still doesn't give a very clear answer on Tuesday, January 11, the next important event we're going to see is January 26th, the real policy decision and his talk and the FAQ about what is the interest rate decision, which is a Wednesday, February 26th on the FOMC meeting and the press conference. However, if on January 11, Tuesday, Powell actually said, you know what, we're actually not going to raise the interest rate, which is what I'm leaning forward to as soon as March, because Omicron is really bad, right? And also the job number on Friday was a pretty big disappointment. We still think we're going to maintain the course of raising the interest rate to fight against inflation as early as June, like what the market expected. And we'll see the market has a really big rally. Why? Because in the FOMC and the December Powell speech last year, they also mentioned on January 13, which is the upcoming week, Federal Reserve SOMA balance is going to increase. So that means they're going to increase the money liquidity, inject in the market to lower the TNX and to support the market. So we have to see what happened on Tuesday. However, if he also agree with 4 rate hikes this year as soon as March, you are probably going to see more downside to the market, probably SPY and QQQ going to pull back down to the 100 and 200-day EMA support relatively quickly. And why I think Powell actually might leaning for still raising the interest rate in June instead of March. One of the reasons back to December when Federal Reserve talk about rate hikes, in the FOMC, as noted in the FOMC, was December. And you can see the US COVID daily new cases in Omicron is really bad this time. It's very contagious. A lot of small business got affected. In the past policy press conference, he keep mentioning that he is not going to raise the interest rate and reduce and start to taper completely until the small business stop to step on the food, right? And especially now they're going to lose all the incentives this year and next year. And he also wants to make sure the minority job numbers are doing good. And all this thing right now is kind of being postponed by Omicron at the moment. So in my humble opinion, it's still very likely that he's still going to push the rate high into June. But again, I'm not him, and maybe he sees something differently, even though I think we're looking at the same data, but we'll figure out on Tuesday, if not January 26th. The other thing about Omicron is even though daily new cases are pretty bad, but the daily new death cases is not still kind of maintain the same. So that means the mortality rate is a lot lower. So you're seeing actually a lot of investors start to speculate that actually this is the end of COVID. It's kind of become like a flu, and it's not that it's very contagious, but not deadly. So you're seeing a lot of reopening names like Airbnb, Delta Airline, Cinema name actually started to push back up right now, even though Omicron is that bad, because market always react first, right? So that's definitely one thing to look at. But of course, COVID is very, very unpredictable, whether there can be immune mutation causing more trouble, etc. So even though COVID still look bad, potentially slow down the economy in Q1, but based on this new data, the daily new death, it looks like it's not going to affect the economy as bad as people think. So US GDP probably will continue to grow this year as the expected numbers. So probably will give a strong support to the US stock market. So back to the story, we kind of cover like the key factor right now is Fed, because don't fight against Fed, right? So we really need to see what Powell said and FOMC at the end of January. In the meantime, just to reiterate, we think because of Omicron and all the disappointing job number, probably we're not gonna see a rate hike in June, but we'll have to until June. We'll have to see. The other thing is a lot of internet rumors like, okay, if Fed started to taper, that means the stock market can drop 80% because the stock market is so high, right? It sounds very logical, but when you're doing trading, you don't trade based on what you feel. You trade based on what you see. What the data tells you should determine what is your action. There's so many bears that have been losing so much money shorting the market because they feel that, hey, the market is so high, it should drop, right? That's a very, sounds correctly, but a very falsely logic. Why? Because we have to look at how much money Federal Reserve put into the market, and don't fight the Fed. That's the period. That's the most important investing rule. And looking at the Fed's money, it's called Federal Reserve SOMA balance. You can see on the chart on the left, red line here is the Federal Reserve SOMA balance. Is how much money they put into the market to stabilize the market. And this chart on the right is starting from August 2020 all the way to the first week of 2022. You can see this red line continue to increase. So I give a SPY, the black line S&P 500, really strong support. And as you can see, right now the red line actually dropped at the end of the last year. And the first week of the 2022 is actually pushing up. And like we mentioned, and the red line should increase quite a bit this week and should provide a pretty strong support to the market, because Fed has been saying they are going to increase the Fed SOMA balance in mid-January. And we do expect 2 weeks of increase, so that should provide a strong support. And the chart on the right is the same thing, but it's actually just to show you a longer time frame starting from 2014 all the way to 2022. And you can see the red line is the Fed SOMA balance. Again, just want to highlight back to 2018 when the Fed really started to taper, which you can see the Fed SOMA balance start to drop. They actually have been calling tapering back to 2014, okay, 2015, but they actually just maintained the SOMA balance. It didn't drop. And you can see the US stock market was performing relatively well. 2016 and 17 was a really strong bull market, and tapering didn't affect anything. The SOMA balance really started to drop back to 2018 when the Powell started to become more hawkish. And you can see the market started to become pretty volatile that year. Even though in the middle of the year, it actually pushed into all-time high until the trade war started. You see a pretty big pullback in the SPY. But did this tapering really affect SPY? No, right? Once SPY find the EMA support, actually push it out at the end of the 2018 all the way to the all-time high in early 2020 until COVID happened, then it dropped again. right? So it really depends on how much tapering Fed is referring to. If we just maintain this SOMA balance, I can guarantee you the stock market, as long as the US stock market continue to improve, the stock market will continue to rally. If it starts to drop, yes, we're probably going to see 10, 20, 30% of a spiral correction, but I can almost guarantee unless there's a recession, we're not going to see US stock market drop as low as 80%. There's just so much liquidity in the market right now. Even the SOMA balance draw back, it's going to have a lot of liquidity in the market to support the market. So just kind of my point of view based on the data that is showing you. And the other thing, the fundamental is really strong, right? We haven't shown this chart in the previous video. Just want to reiterate, if you look at this chart, the red line is the earning per share from the S&P 500 in the US market per quarter. And the blue line is the S&P 500. You can see the US companies continue to deliver really good earning, especially the S&P 500 companies. Their earning per share continue to raise all-time high, push into all-time high. The only 2 times that push back down is back to the 2009, the recession, and also the COVID in the past 20 years. So currently, we still have a really strong economy. And also, don't forget, when the inflation happens, not only everything goes up, but so does the S&P 500 EPS, because everything the price raise out, their revenue get increased, the EPS is going to be improved as well. So that's the other thing we have to look at. Should we start to see another drop of this red line, that means the US companies' earnings start to drop, then yes, we're going to see a pretty big correction or even enter into the bear market. But right now, the data just doesn't suggest that at this moment. So let's take a look at what's going on the first week of January, and pretty much will give us a good idea of what's going to happen this year. The first thing a lot of investors may or may not notice is the TNX, the 10-year Treasury yield, actually push into the range high. We've never seen 10-year yield break above 18 ever since COVID happened. And now this daily chart suggests on the left, the TNX finally break through and currently doesn't have any sign to pull back. So because when the 10-year yield is strong, it's going to give a financial and really strong support, and so does the industrial and small cap. But it's really bad for technology names. So on the chart on the right, you're seeing the industrial net actually holding an EMA support and pushing to range height as well. It's because TNX is so strong. However, if Powell said, you know what, we're not going to raise interest rate that quickly, probably June, and the tapering might not happen that quickly, you are going to see a really sharp sell-off TNX. And you will see industrial and financial start to reverse. So right now is probably not a very good time unless you want to do day trading to position in long-term investment or swing trading right at tomorrow, because we really need to figure out what's the next step for Federal Reserve that will drastically change the market direction across many different sectors. Okay, so on the SPY daily chart, right now it still maintain this daily uptrend, as you can see the white line here. But right now it's kind of embarrassing. It's kind of in between, right? If Powell says something bearish on Tuesday, you're probably going to see SPY pull back to this the lower range of this uptrend, which is around 455. The next 200-day EMA is at 437 on the daily chart. So there's a lot of support potential downside here. On the upside, again, if Powell said something bullish on Tuesday, you're probably going to see it push out very, very quickly. So it's kind of in between, really embarrassing, especially unless you want to do an option, kind of like strangle or straddle, betting on both sides, which is kind of expensive. Maybe the other way, just sit on the sideline on Monday and see what brings to the market on Tuesday. On the right side, QQQ is a technology ETF. You can see tech actually down pretty heavily to a lower range of this uptrend already, because a lot of US tech companies are high PE companies, right? They have a massive debts on their balance sheet. Any rate hikes will increase a lot of their interest rate to cover those debts, and therefore lower their EPS and their operational margins and revenues. So that's why you see a pretty big pullback on tech at the moment. And even though tech SPY is still kind of holding up, not too far from the all-time highs, because most of the SPY and QQQ weight are on the FANG, Facebook, Apple, Netflix, Nvidia, and Google. So they are actually holding on relatively well. On the other hand, a lot of high P's that got slaughtered, right? Their slaughter is real slaughter. For give you two examples, Lemonade, which is an AI-driven insurance company, was a really popular stock, especially from the retail side. At the beginning of last year, you can see the all-time high 188, now all the way down to $37. That's down 80%, right? In the interest rate high situation, you want to avoid companies that have massive debts, don't have delivered the quarterly revenue growth compared to YOY the same quarter last year, less than 40%. And also, if they still have a really negative EPS, that means that's a growth stock you should avoid. However, a lot of high quality growth stock like Roku has positive EPS, better than 40% of the YOY quarterly revenue growth, still got slaughtered as well. Roku is a name that can unplug your satellite TV, etc. So you can watch so many channels just on your TV using the Roku service through the internet. So you don't really need those dishes or satellite, whatever, to watch those sport or news, so on and so forth. And they also provide some video game on the platform as well. Really powerful product. And you can see last year it tested all-time high at 490 and then just all the way back down to 180. It's pretty heavy, about 60-70% downside. So Roku still relatively higher quality than Lemonade, but both got slaughtered really badly compared to QQQ. On the other hand, you can see the financial ETF XLF. And the right side, KRE is a regional bank ETF. Performed really well in the first week of January. Has been up about 10-14%, especially regional bank KRE. Really benefited from a short-term interest rate hike and has been pushed out about 14% last week. And however, like we said earlier, if Federal Reserve decide not to raise interest rate in March, you're going to see TNX pull back, and so does the financial and regional bank. So just kind of give you a flavor when the interest rate high, how well those financial names will do. But doesn't mean it's a good time to chase them at the moment, especially their earnings season is coming up this week on Friday. And again, if Federal Reserve changes their course, you're going to see a really sharp pullback. So any pullback is probably a good time to add them, but not right now at this high. That's my humble opinion. The other thing to look at is the cryptocurrency. So if you look at Bitcoin and Ethereum right now, they're in the daily downtrend, pretty heavy, and breaking down this daily uptrend, and still have no sign to recover at the moment. As well below the daily EMA support, which is the Bitcoin on the left side. Ethereum on the right side is the same chart, breaking all the 100-day, 200-day daily EMA support, still very heavy. However, will Bitcoin totally collapse to zero? I personally don't think so. The crypto market is so big right now, and I just see a lot of application on it, right? And this is how I feel like back to 10 years ago when I see Square and all the other fintech company building the infrastructure. And then you see what happened the next 10 years, how they develop in their stock price. And I think we're seeing the same thing for crypto. We're seeing so many startups working hard to build out the infrastructure. So there's NFT, there are DeFi, to use crypto to do loans, etc., right? So it's definitely a very robust ecosystem. And unless the worldwide governments start to make regulation to push them down, like, hey, you guys are all legal, which I don't think that's going to happen, then we should see more application and innovation happen in the crypto area and continue to push the their prices going up. It doesn't necessarily mean Bitcoin or Ethereum or whatever coins will absolutely go up. There might be some coins do absolutely fantastic price action, while the other coins just stay pretty low. So we just have to see how the things play out. That is a crypto market itself is a very competitive, very dynamic, and fast changing industry as well. But back to the fundamental, if you look at when Federal Reserve started tightening out their liquidity back to 2018, that was a really bad year for Bitcoin. It actually dropped from about 20,000 all the way to 3,100. So if the same thing happened, if Fed really tapered, very seriously, very aggressively, we might see the same price action again this year. So again, we have to look at how much liquidity we have in the market, and then we can better determine how well the crypto market will behave this year. Again, I'm still a bull on the crypto market, but maybe waiting a little more pullback before adding more, or until the Federal Reserve provide more clarity of the market. Sorry, interest rate hike, forget to type the E. The other thing I would take a look is some other altcoins actually perform relatively well, have a strong momentum, and they're finally actually picking up really fast. This is Solana and Cardano, which their daily weekly charts on the left and the right correspondingly. You can see in 2021 they're doing absolutely fantastic, right? Up a couple 100%, and their transaction volume now is the third and fourth largest cryptocurrency in the market right now. And give you an example, like Cardano is really strong, right? It's actually kind of like Ethereum. It has the scalability of Ethereum and the same transaction speed, which is improved from Bitcoin, a transaction where it has to take about 5, 10, 15 minutes, which is way too long. Ethereum and Cardano, you can actually finish approving a transaction and verifying a transaction in a matter of seconds, just like a regular credit card and debit card. So that's why I've seen Ethereum and Cardano actually have real world application that has a lot of fintech and apps working around it to build an ecosystem that could be a very successful coin in the future. And the other thing I like about Cardano is it's actually a limited supply compared to Ethereum, right? So your value is actually going to be keep increasing compared to Ethereum, and we're going to make more video down in the future to provide more example and explain what's going on and what are the differences between all of them. So yeah, just want to highlight at the end that we have a very robust option-based, but also some stock swing trading program on Discord. The winning rate is the blue line is almost always above 50%. And the orange line is the average return per trade per month. You can see the performance is always above 0%. That means we're always making money in our swing trading program since we launched the program in October 2020. For the long-term investment, for people, designed for people or professionals who are more busy with their life. So we in and out more or less frequently. We have 70 trades 2021. Our average return per trade is 17.5% with a winning rate at 76%. So if you have any questions, feel free to reach out. And if you're interested in our Discord community, make sure to check our website, www.moneypigtrading.com.